Welcome to today's market report.
European shares inched higher on Thursday as investors awaited key US labour data, while German shares fell after shares in pharmaceuticals maker Bayer were hit by a court ruling. The Pan-European Stock 600 index rose 0.1% to 445.76 points, just below Tuesday's record high of 447.15. French plane maker Airbus was among the best performers, rising 6% after it set out sweeping goals to expand production of jetliners as the airline industry recovers from the COVID-19 pandemic. German shares shed around 0.4%, lagging other regional markets, with Bayer the biggest drag on the DAX, falling more than 4%. The stock was set for its worst day in 3 months after a US judge rejected its class action plan to settle future claims related to its Roundup and other glyphosate-based weed killers. European shares have moved little this week, but achieved record highs as continued formations of easy monetary policy and waning concerns over inflation painted a favorable picture. Investors are waiting US jobless claims data, which is due later in the day, and personal consumption data on Friday, two important metrics considered by the Federal Reserve in adjusting policy. Market participants stayed relatively indecisive ahead of tomorrow's release of the core PCE index, which is the Fed's favorite metric. Mining stocks added 2%. The sector was the best performing European sector as metal prices rose on concerns over supply disruptions in the top copper producer, Chile. Food and beverage stocks were the worst performers, falling 0.6% on the losses in British processed foods maker Tate & Lyle. The stock shed more than 5% after its annual revenue fell. Among other movers, HSBC fell 0.2% after the British bank said it was exciting its US retail business to focus on Asia, its biggest market. Puma fell 2% after French luxury goods group Kering said it will sell a 5.9% stake in the German sportswear firm through a share placement. Crude oil prices fell on Thursday after 4 days of gains as traders fretted about the potential for a rise in Iranian supplies even after a bigger than expected draw in US crude oil supplies. The futures traded 0.2% lower at $66.09 per barrel. Brent contract fell 0.4% to $68.47 per barrel. Gold futures was down 0.58% at $1,890.1 per ounce. On the FX front, sterling traded within recent ranges against the dollar and the euro as a lack of fresh economic catalysts in a sparse data calendar kept the currency in consolidation mode. Recent movements in sterling have been dictated largely by the direction of the dollar rather than any strong fundamental catalysts. Sterling is the second best performing G10 currency versus the dollar this year, up 3.4% year to date and trailing only the commodity-linked Canadian dollar. That performance is a result of investors betting on a quicker reopening for Britain's economy on the back of its rapid COVID-19 vaccination pace. Britain commenced the third stage of its reopening last week, allowing indoor dining in pubs and restaurants. Economic indicators such as retail sales are looking up as a survey of purchasing managers across industries and employment measures. The euro edged lower yesterday in a market supported by dovish European Central Bank commentary. Euro area yields rose sharply earlier in the month, driven by speculation that a stronger economic outlook driven by speedier vaccinations in the bloc could prompt the ECB to slow its PEP purchase at its June 10th meeting. This best pushed the German's 10-year yield and the bloc's benchmark to 2-year highs near positive territory last week, and the risk premium on Italian bonds to levels seen last November, before the ECB expanded the stimulus. But comments from ECB President Christine Lagarde last week that it was too early for the central bank to discuss slowing its pandemic emergency bond purchases, reinforced by comments from several others, have removed the upward pressure on euro area bond yields. Adding to the dovish mood, ECB board member Fabio Panetta on Wednesday said the ECB should not reduce the pace of asset purchases as the economic recovery is in an early phase and inflation remains too low. The dollar was up this morning amid growing expectations that the US Federal Reserve will slowly but surely move towards discussing a tighter monetary policy. The dollar index was at 90.085, just above 90 for the first time for this week.
This is today's market news. Thanks for listening. We'll see you next time.